Hello and welcome to June's episode of Root and Branch. Hi Nina, how are you?
I'm very well, Chris. How are you?
Good, I am good. I think the rest of Europe is the same as us. We have finally got some summer and appropriate for a sustainability video. My garden is lovely and green and things are growing, so it's lovely.
Lovely. It's still a bit foggy down here on the
Oh,
coast. So if any foghorns go off, I apologise. That's not me.
okay, right. So let's dive straight into it because this is meant to be pretty rapid. Greenium is the first kind of topic you wanted to talk about. So let's have a go at that.
So looking into whether there's a bit of a pricing premium or a pricing saving to be made on ESG-linked transactions across leveraged finance. Now, LCD, over the last few weeks, we've been putting together what we're calling our ESG tracker. So we now have, if you go onto our website, you now have a table which outlines all the transactions, both in the US and in Europe, which have an ESG element on them. So that's whether it's a green bond or loan, or whether there's something with a coupon step up or a margin ratchet linked to ESG factors.
How do we find it on the website?
If you go into the website, you click onto the research section, and then you click into the research/data section, and there should be something that pops up for your relevant region. We don't really, although obviously ESG-linked financings have been really stepped up so far this year, we don't quite have enough data yet to do a market-wide analysis. Okay. What we have been able to do is look at individual transactions, look how they compare to the average pricing for the same rating, for the same sort of structure.
So what's the trend? Because I remember about a year and a half ago, people poo-pooing, the fact that you've got a benefit. And then, of course, we saw the introduction of ESG-linked grids and all that kind of stuff. But is there a more general greenium?
There does seem to be a little bit of a saving to be made if you're introducing ESG elements to your financing. As I say, we can't say for sure this is a market-wide trend, but looking at individual transactions, especially on the high-yield bond side. So the Veralia transaction there, 500 million deal a couple months ago. So that was priced at 1.625% yield. And for around the same time, the same sort of BB plus unsecured issuance to that point of the year, that was coming at a yield of 1.94%.
Hang on. Well, I'll take that. That's pretty good.
Yeah. Well, the most impressive one is the original ESG-linked transaction in Europe, which was the PPC, Greece's public power.
Yes. Yeah.
So their original 650 million deal, which was rated BB minus, that came at 3.875, and its add-on came at 3.709. And similar sort of ratings for that year to date had come at 4.89%. So there's definitely a bit of a saving to be made there. Wow. I think it's very much worth saying that bankers and issuers across the market would very much stress that you're not going out certainly leads aren't going out to borrowers saying, hey, if you add a bit of an ESG ratchet on here, we can save you 50 bips, we can save you 100 bips. Certainly not working like that. But where, there are KPIs that can be used that are relevant, that are meaningful, that are ambitious, obviously there's a lot of demand from the investor base there. And they're pretty popular.
But I mean, you know what, that makes sense because it's like 101 economics about supply and demand. So, you have deals that are unrated, deals that have a credit rating, and then deals that have an ESG element to them as well. If you hit unrated, small group of people, rated, your universe gets bigger, rated and something ESG, you've got the maximum demand for your issue. So that must lead to some kind of price change, which it clearly is. That's good.
Yeah, that's the anecdotal evidence that we're seeing so far, sort of speaking to leads and bankers around the market. Seems to be, there are other funds and things that are able to kind of look at this. Look at this product and coming into things. And books seem to be doing very well on these transactions.
Okay. How about transparency? I know that's something that is interesting and how people, I guess, show what they're doing when they say they're truly doing something sustainable.
So this is something that's been coming up more and more sort of as ESG has become a bigger part of our financing world, of our lives, quite frankly. And it's a topic that's been raised over and over again, and people sort of questioning how can we make sure that what we're seeing the most amount of information and that we're having access to the most relevant information. And obviously there's quite a lot of regulation that's coming in, which is aimed to sort of benefit that. Obviously the big one is the EU taxonomy, which is going to be coming to full effect from January 2022. And that's going to provide standardized definitions on whether investments are sustainable or not. Sort of related to that is the EU Sustainable Financial Disclosure Regulation, the SFDR. The first part of that came into play in March, and then it's going to come really sort of fully from December 2022. And that's to increase transparency across the whole of ESG. So really the end investors, the real people, they're not just looking at, oh, this is ESG, this is sustainable, to really sort of give them some confidence and some clarity. And then within leveraged finance land itself, obviously, you've got, for investors, ELFA and the European Leveraged Finance Association and PRI, which is the Principles for Responsible Investing. They've been working on fact sheets for specific markets. Yeah, so investors can put those out, or investors can get these from the issuers, and it will have a lot of relevant data. So people aren't going to have to be sending out their own individual questionnaires.
So I'm glad you mentioned that, because I think we probably already talked about the way that S&P Global Ratings is the ESG partner with the European Leveraged Finance Association. So we're constantly talking to them about how ratings fit in. And of course, all those things like EU taxonomy, our sister company Truecost has a lot of things that they can do to help people monitor those things.
And then for LevFin itself as well, you've got the LMA and Alpha working together. They're producing some guidelines at the moment on best practice, specifically for these KPI-linked margin ratchets.
Yes.
Which is going to help a lot, because we're sort of in the Wild West stages still. Sort of people are still trying things, and sort of we're still developing what it's going to look like in the end. And there is a sense there's never going to be completely standardized across the market. You can never say, a margin of, or emissions target of this is worth X amount in a margin ratchet, because everybody's on a different step of their ESG journey.
Well,
it's going to give some clarity.
Interestingly, we're also working, and hopefully not too long away, we'll be issuing second-party opinions on whether people have got sustainability linked loans or bonds. For me, sustainability linked loans linked into the European Leveraged Finance Association and LMA, what they're about to bring out. So it's all interesting. It's very interesting, of course. That's why we're having this chat. So I think I just wanted to drop into the conversation about what S&P is doing with Advent, the global private equity firm. And the way that now Advent and S&P's Global Sustainable One are collaborating in a way that Advent is rolling out corporate sustainability assessments across many of its portfolio companies. And it's really, we're obviously thrilled that a major global private equity player has chosen the CSA to use as something that it would like to see rolled out across its portfolio. It's brilliant. And last but by no means least, you are going to be one of the leaders of our first Root and Branch seminar, which is coming up on the 14th of June.
Yes, we have a webinar coming up on the 14th in the afternoon UK time. We had penciled it in for a couple of weeks ago, but it's delayed due to technical issues. But we are bringing it back in the exact same format on the 14th. So do join that if you can.
Cool, perfect. Thank you very much, Nina, for everything, as ever. A pleasure. I hope the fog lifts. Any questions, please feel free to send Nina or me an email or give us a call. Thank you.
Thanks.